All right, traders, welcome. It is Thursday, August 15th, 2024. Great day in the markets today based on some retail sales figures, based upon Walmart earnings. Markets just shot up incredibly. Let's get into that. Good day for our account as well. A good week for the account. So good stuff happening. Let's get into that. Talk about some of the trades we're looking at. Talk about some of the trades we have closed, see where our accounts are, see what we're working on. And let's get into it. So actually, let me first share with you. Let's get into the markets a tad. So let's jump into this. I'll jump off screen. We're going to keep it short today. So I got lots to cover. We'll cover a little bit of overview of markets. We'll cover the account. We'll cover some new trades that we cover on. And I'll give you a little bit of a hint of what we did with the trade plan as well today. So let's get going and take a look at all of these things. All right, so here we go on ES today. You can see we were in a downtrend line here on the daily, just, lower high, lower low, lower low, and then back to the trend line yesterday. And then today was the deciding factor. And you got really strong retail sales info that came out this morning. And the market was just off to the races thinking, well, things are in great shape. You'd already seen the MACD improving. The RSI had been rising. Squeeze had been reversing. MACD or PSAR was triggered yesterday, a bullish reversal. So signs were that this was going higher. We're above the 21 and the 50. So it looked good, but we had to wait for confirmation, which looked like we got that today. Now, what we have not gotten yet is we do not have another higher high yet. So we'll see if we get some more follow through tomorrow and we get like a higher high going. Now the downtrend on the daily may be over. The downtrend or the uptrend on the weekly, though, continues. It's still just a nice weekly uptrend that we're in. So this thing looks still good. Huge hammer candle last week, huge reversal this week on that reversal candle. So everything's just really popping the way it should overall on ES. Quick take a look at oil. We won't go into too many today. We'll take a look at oil. Oil this week off of its highs, but still positive for the week. It's just meandering in and around here. 2 days of selling, and it's just hanging. No real effects from anything in the Middle East on oil. Now, obviously, there hasn't been any like major attacks or something like that yet. I'm thinking that could keep oil prices a little bit of a bid under them, but we'll see. Oil had been sliding, for weeks until last week. It made some improvements, kind of just digesting some of that move this week, holding the 21. So oil, short term, looks decent here, and then long term, you're in this symmetrical triangle. But look at the squeeze that we're in. I mean, this is a squeeze dating back to April 29th. So almost 4 months in a squeeze, and you're in the white, not just the red, which is an extreme squeeze. This thing's getting wound and tighter in this triangle. It's going to break hard one way or the other. We'll see which way it goes. All right, ZN notes today. Well, they dropped because retail sales were strong, which might, have an impact on the Fed making multiple rate cuts this year. I still think they're cutting in September. That's probably a given. Will they cut twice in September? Will they cut again before the end of the year? Excuse me. We'll see, but that's why bonds are down a bit today on this strong retail earnings. And now just questioning, does the Fed cut a lot? And ZN, the notes are much more temperamental than the 30-year, which was down a little, but not much. So 30-year still hanging in there in a pretty good trend, decent uptrend, broke out of this triangle. We can actually get rid of this thing, broke out of this ascending wedge. Okay, I'm going to leave that on since it's could potentially become a support level if we drop down. But overall, bonds still decent, good pullback. If you liked bonds before, okay, you should like it after some pullback here. So good look on bonds. If we take a quick look at gold in a rising wedge here, still fighting with this resistance up here at these all-time highs. Losing a little momentum on the MACD, but still not bad. And the weekly, not bad at all. You're in a squeeze on both. So this thing's ready to roll one way or the other. Upside may be the way it moves. On the Aussie dollar, sitting perfectly right at the 50 on RSI. A little bearish on the weekly, a little bullish on the daily, sitting right at the 21. Perfect strangle opportunity there. And then the euro still strong, still moving to the upside at the top of this channel, trying to break through it. Yesterday failed. Nice hammer candle, reversed itself today. Do we get a little bit of a pullback? If we do, this thing might set itself up for a strangle at some point down the road. Strong day in the small caps and RTY. Good bounce back above the 21, back above the 50. Hey, RSI rising, MACD rising, squeeze starting to reverse here. Even on the weekly, getting a little curl here. We'll see if MACD can start to get its momentum going. We'll take a look at potentially this area here, extending it out a bit as a little bit of a potentially previous resistance level, a little bit of a support level, and then will it be resistance again, or will we break through it here? So pretty bullish look. And then we tried to get a copper trade on today. It just didn't fill, and I didn't chase it. We'll see if we get a chance tomorrow to do that. Falling wedge. The weekly starting to get a little bit of a curl on the MACD. 1 week's not enough data yet, but RSI and all of that starting to curl. And then we've got a bullish PSAR signal here on the daily, rising MACD, RSI, squeeze in a squeeze, and it looks like a bullish move higher. So we wanted to get a credit spread on copper. It didn't play out for us today, but we'll probably look again tomorrow. And silver, kind of the same type of a setup here. Not as much of a reversal potential on the weekly, but still looking good on the daily. So silver's also one of those to keep an eye on. All right, let's keep moving quickly here. We're going to keep it short for you guys today. Well, let's talk about what happened in the daily reports. Core retail sales today jumped 0.4%. They were only expecting 0.1%, so a big beat on core retail sales. Retail sales month over month, huge move, 1% versus down 2.2% last time, and only expecting 0.4%. So, I mean, just giant beats on retail sales. Unemployment numbers fell a little bit more than they were expected to come in, so they came in a little lighter. All these things are really probably decent for the Fed to maybe not make as much moves, which is why the market rallied today. But the Fed's still, going to cut. Now they got to make sure they don't, things don't get too crazy. But economy is definitely strong here, so I think that's what we're going to keep in mind and take away from that. All right, let's take a quick look at how we ended up the day today. And we were off the last 2 days. We had some evening engagements that kept me from jumping in. But let's just take a quick look at where we were. So back 2 weeks ago, and when we took a decent hit on the portfolio, dropped down, we have rallied over almost $80,000 since then on our net lick. So we've recovered at least 80, not quite 80, but about $80,000, 70-some thousand on net lick recovery in just over a week, just short of 2 weeks. BP has dropped significantly. We've legged back into our bill position, so we're now back to 10% in bill. We have rebuilt most of the trades that we had on. Good week going this week. Now, this $7,500 on Monday, not really it's a realized loss, but it was a roll, and I've only booked the loss on closing the current trade, and obviously we have a new trade open. Now, what I did here, and the reason that I'll book the loss, and it'll show up as a realized loss until the other part of the trade wins, and then that should be a nice winner, net winner. What I did was on Monday, I rolled 6 naked puts of a 112 up to that was remaining, up to 3 naked puts of that 112. So it's now a 111. So I've consolidated all but one of my 112s that I had left over. I closed 3. I left 3 open. Those 3 were in decent shape. I had good buying power, so I didn't have to close those. So closed half. And I closed 3 of my 112s, long-term 112s. I closed it. It cost me about $75,000 to close those. My hedges, though, were paying 55,000. So really, had I not had extra spec trades on, we'd be down about 20 grand instead of 175. But it is what it is. We were over allocated on some spec trades. Totally user error here, but we're getting it back. So we've really rejiggered the portfolio quite a bit. All right, so this week we have had good wins. 0 DTE wins, 0 DTE, some more closes today for winners. So we've booked, so far almost $4,000 in gains. Let's take a look at how this week has gone here on Monday. Again, this was the roll. We rolled the 6 contracts to 3. So we booked the loss on the roll, and rolling is always losing, even though we take a credit or a small debit or break even. Rolling is always losing and entering a new trade. So we booked the realized on the roll, which is fine. We're in good shape here. And then on Tuesday, 0 DTE trade. Wednesday, 0 DTE trade winner. Today, we closed another Strangle winner for 2 grand, and we had another 0 DTE Iron Condor win today. So that was a nice winner today on 0 DTE. So we're really just kind of booking this money as we go through it, and adding to our totals. But pretty much the account's been rebuilt and ready to rock and roll. We've made some changes, which I'm going to go through right now for you. So let's take a look at the actual account. We'll talk about what we're doing, and you can follow along with exactly how I've made some adjustments since the Volmageddon on the back on the 5th. All right, so let's jump into the account here. You can see how the account is faring in after hours and during the day today. So here's what we have on. We do have an Aussie dollar strangle. This thing is up 17% in a day, not too shabby. Oil here, we are up 42% on a 112. And then we also sold a naked put 3 days ago, which is up 22% in 3 days. So fantastic stuff. Oil having a good day here. That's helpful. All right, we have a 14 DTE hedge that's been on. Boy, this thing saved some decent bacon for us. 2 weeks ago, it did its job, but I did not close it because I didn't close all of my naked puts because I had hedged against a good chunk of them. So I left this on because I had left naked puts on, and I added more naked puts back on. So this will expire tomorrow. It'll be sad today, it'll be sad when this is gone because that thing really did a great job for us. All right, we still have a put debit spread from a 112 still on. We had taken profits at 95% on these some time back, so that's just going to expire in a day. Here's another 112. We had already taken the profits, full profits, 95% on this one. So it's just helping us with the little Vega, a little negative data, not a whole lot of anything. These put debit spreads don't do a whole lot. They're only here if the market decides it wants to move into a little bit of a bear market. Then they start to pay off. Other than that, okay, they're not hedges. They're just there to provide us some extra income if the market trends down at all. We got a new hedge on today. So this is just part of the hedge. So new hedge on. We'll put the new 14 DTE hedge on. This is part of a different hedge that went on today. So this part of the hedge is on. And then let's take a look. We've got, this is the one last remaining 112 that we had on, that we have not made any adjustments to. We're at 78% on the naked puts, which is fantastic. So that's a good trade. So that one has stayed on. We had a 112 that we turned into this is an XO 112. We had turned it into a regular 112. We had already adjusted and closed some of the naked puts on this thing. This at 70% now, and we turned it into a 111. So that trade is in good shape. This 147 is an incorrect number because we rolled up the short puts of the PDS, and we've also rolled up and consolidated the short puts, period. So the tasty numbers don't make any sense, but overall this trade's in good shape. It's actually up $220 overall. Here on after we've already taken money out of this trade for winners. We have a 60 DTE weekly hedge that thing's on. I'm leaving it for now. It's not really part of the new plan, but it's something that's on there. It's only worth $98 to take it off. So no sense, spending $98. Why not leave the hedge on? All right, so here's another one of the long-term 112s. This is where we adjusted the 6 nakeds for 3 nakeds for pretty much a break even. And these 3 nakeds are already at 60%. So I'm looking to cash those in. That'll be a nice $4,000 winner. Here is an old put debit spread of a 112 where we've already adjusted naked puts and the put credit spread itself. We were stopped out of the nakeds on it, but the put debit spread's still hanging here for now. This is part of a new hedge that we put on today. So again, we've added new hedges to the account, and we've lightened up on the 111s just to reduce risk, notional Vega exposure a bit, but we have not reduced the income in the tail profit. So we have re-engineered the trade a little bit to make it a little bit better for us, reduce some risk, cut down how much hedging we needed, and we added more hedging. So it's all great stuff here. This is a 1-1-1 trade that has a new naked put. We were stopped out on one of these, but added the naked put back in this week. You can see a day ago, it's already up 22% because today was a gigantic day. So that's fine. We'll keep running with that. An old PDS from a XL 112. Here's another 111 that we had closed, and we added the naked put back in 3 days ago. Again, we've been slowly just adding on this up move. We've been slowly adding twin puts in, but only as 111s, not 112s. Here's our naked put that we sell as a campaign style trade. It's down a couple $100, nothing to do there. It's been on for 36 days. Here is a long-term 111 that also has been reconfigured a bit as well into a long-term 112 that's been moved into a long-term 111. We're still sitting on an XL 111 trade. We have pared it down from 666 to 444. So this thing is still profitable here, and it's giving us a nice big fat trap hedge. So if the markets do roll over, we have that. Not really a hedge, but it's a put debit spread in case the market does go down. We have 106 days on that. And then this put, these puts are just down a couple hundred, just $100. Okay. And then lastly, there's a put debit spread left over from a 112 XL. This trade is not in bad shape. This trade is actually only down a fraction. So we've got good stuff working in this account. Here's gold. We've got a strangle on. This strangle's up 15% right now. Here's gold. Here's a 111 trade in gold. This is up 77%. Bonds, this is just a leftover put debit spread. It's only got 8 days left to live. It's fine. It'll expire worthless, but we've already taken off the naked puts. Here is a put credit spread trade that we put on ZN. I'm going to actually, I'm going to enter a good to cancel on this thing. So I'm going to put a good to cancel on this to close out at a 50% winner. But here is a 10-year note put credit spread that we got. Again, Bill, we're back and forth to full 3% or full 10% of buying power. And then the TLT trade doing just fine, up 16%. So there you go. What we've done is just kind of kept what we're doing. It's been working. I mean, we had made quite a bit of gains over the last couple of years. There's no reason to throw that whole thing out over some losses this year, which we will get back. We were up 40% with a great strategy. We just got beat up on some spec trades that we had on that we probably should not have had on in hindsight, but hindsight's 2020. And we just need to keep our keep to our plan. Those were spec trades outside of the core plan. Had we kept the core plan, like I said, the hedges were close to covering, and that's all I care about. They don't have to win. They don't have to cover everything. They just have to really mitigate the damage, and it would have been pretty minimal on the long-term 112s. But now we have gone back to basics a little bit more. We've changed it to 111s, but we've reconfigured the 111 to generate the income that we need here. No, we have not raised the naked puts up to some 10 or 12 delta thing. Not doing it. I'm not doing that. So that's where we are on that. So a little bit of a revised plan, and it's done great. Our Vega back down where I think we're comfortable, and certainly the amount of risk that we have is cut in half. So I love where we are on that. We have added, we've kept the 14 DTE hedge. That thing works perfectly. Does it cover everything? No, it's good to mitigate the damage we have. So number one, that's where we are. And number two on that is that we added another new style hedge that's got some calendarizing in it. So we've got a calendar-based hedge there too, giving us some additional help. And as that thing matures and ladders on, I think we'll be even better with that. And we continue to just keep putting trades on. Okay, we didn't shut down. We didn't go run into a cave. We keep trading. Our net lick has come back up 80 grand so far, and there's more to go. So we've already gained about 80 grand in net lick. We've already booked a bunch of profits this week, a lot of zero DTE stuff, as well as some Strangles. We're looking at some credit spread trades. We tried to get on today in copper. We'll work on it tomorrow. We've got the TLT trade on. We've got the new naked puts in oil. So we're sticking to everything that worked. Just size down a tad, a little bit better hedging, okay, and keep your buying power in check. And that's really the key. And then when we start to get some signs that things might be a little bit of unrest out there, okay, then we take a little bit more precautionary measures with what we're doing. And right now, my buying power is sitting at 36%. So we are in, and that's with Bill, I believe. So if I'm including Bill in that, just take a quick look here. Yeah, we're at 42%, including Bill, 36, 34%, whatever, with Bill in there. So really great on the buying power there. So happy with where we are. We'll keep moving forward. I hope you guys stay safe out there. Keep tweaking your plans. We've spent almost every day with members in long Zooms covering new tweaks to the trade plan. Got new versions of the 112 and the 111. We're still doing both. So a little bit newer hedging and some other trades that we're putting into the mix to generate some income, diversify strategies, diversify underlyings. We've also reduced the notional and the Vega a bit as well, just to make things a little bit smarter. So we get smarter. Hopefully we make more money here. We're on for the rest of the year. Goal is to make it back, and we'll keep cranking. Everybody take care. Have a great rest of your day. Bye-bye.